Hello, my name is Eddie Tofik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London UK feed wheat.
Paris milling wheat. Paris milling wheat, for a change, is very different from Chicago and Kansas City wheat. Here, there has been one dominant pattern, a quite large one, that this week has seen what looks like a break on the downside. It is, of course, the dark blue highlighted late August 2024 to date ascending triangle pattern, currently 234 to 241. This pattern has the requisite combined 5+ touches and is made up from a lot of smaller patterns within it, but is clearly seen on my daily chart. In the past, the topside had been capped here to a certain degree, and most certainly defined at least, by the bright red neckline extension to the June to November 2023 head and shoulders top, currently at 239. This happened once again in recent weeks, so please keep an eye on this as resistance overhead going forward. Up until now, I could not give definitive targets below for the large dark blue ascending triangle pattern, as we hadn't had a true break lower and down below and away from it. All I gave were, in the past, potential should we see such a move lower. Today I'm going to lay out targets below, as we have spent enough time below the dark blue lower trend line stroke uptrend for me to do this. Thus, the primary target X would be in the 226 zone, with a secondary, harder to reach target X1 down in the 194 zone. Today we are not too far away from target X. Now, it is now a fourth week, despite laying out targets today below, where I give a strong word of caution. We had been so far advanced along this dark blue ascending triangle pattern that the chances of a false break, higher or lower, have been very, very high. So continue to have supreme caution on any moves, including this one down, and in any other direction. So for the break lower, what should we look for as support? Well, because of the size of the pattern, it would be quite away from the current market, but please still bear in mind these. Thus, looking below, we have the 50% absolute Fibonacci support at 219, which helped hold up prices in November and early December last year, and also eroded the bearish incentive back in August and September as well. That's last year as well. However, just above this is the purple March 2024 today uptrend, currently 223. This is the one to immediately watch. Minneapolis wheat. So a very significant move right from the get-go of this week, with consecutive closes below the bright green lower bull channel line of the late January to date bull channel, which is currently at 650 to 673. What looked like last week like the market eyeing the overhead bright red middle time, currently at 662, of the late August to mid-November 2024 bullish shift pitchfork, well, that turned into the market taking fright at this and turning lower. Initially down through the April 2024 low at 635, then the gold long moving average, currently 629, and then yesterday down through, and there's quite a lot here actually, down through the mauve medium moving average, currently at 616, the broken but now possibly repaired dark blue July 2023 to date downtrend, currently at 614, the October 2018 low at 611, the green short medium moving average, currently 613, the bright red lower time, currently 611, the bullish shift pitchfork, and the April 2021 low at 606. Prices even pierced the previously breached, though possibly repaired, purple September 2019 today uptrend, currently at 604, though the market did not close below it. What did eventually stop was, and to me at least, the somewhat significant neckline extension and this is a doozy of a trend line, to the neckline extension to the inverted February to June 2023 pattern. Plus, it was also the upper trend line to the February 23 to date breached and possibly being repaired, expanding wedge pattern. Any of you who have listened to and watched my broadcast back in 2023 well, you might be familiar with this. or might be familiar to you. It's currently at 602. In the overall picture, much like Chicago and Kansas City week, the market here had 2, possibly 3 or more major features that developed in this market. The first and by far the largest is the late May 2024 to date possible very large double bottom pattern. We had been constructing the second up leg in this pattern, and the key to the breakout upwards, I suspected, will be the 50% Fibonacci line of the May to August 2024 move at 670. This really is a very large pattern. However, with the turn lower, this idea is no longer valid, and I'll retire it after this commentary. The second pattern was more recent, though still quite big. It was the early October 2024 to date rounded bottom pattern. Here I also looked at the May 2021 low at 676 as the final point of construction and the start of the breakout. However, likewise, this pattern is no longer valid, and I'll retire it after this commentary. Next we have, or maybe should say had. Have is still a good word for now. We have the bright red bullish shift pitchfork here for the late August to early November 2024 move. We are now below this pattern. Unless this break lower can repair the break and turn back upwards, then this pattern will be retired as soon as after this commentary. We now just have the purple uptrend left below, and that's being tested, and the combined declining neckline extension and expanding wedge trend line, which is also being tested. But I will point out one other feature to consider. You see, we have a lot of congestion between about 610 down to 585, dating from November last year to January this year. And that could erode any further bearish incentives, so just keep an eye on that. London UK feed week. There continues to be here on this daily chart, even now, these many weeks, months even, only one major significant pattern here, and that is the bright red late May to early July 2024 bearish shift pitchfork. The market has recently reasserted the dominance of this pattern, with prices breaching then repairing an attempted break higher over the bright red upper time, currently at 180.55. Add to this the narrow mix of literally all the moving averages between 180.10 to 182.80, as well as the 50% absolute Fibonacci line overhead at 180.5, and you have a close together compacted zone and area overhead. That, as I have said repeatedly for weeks now, that is brewing up for a significant move. I was, as I have said 10 weeks ago, and ever since, and I quote, even now still looking for that better pattern to appear. Until that shows up, I'll continue utilizing the bright red bearish pitchfork. End of quote. This leads me to my final 4 points, and 3 of them were something that I'd noted in my recent annual commentary on London feed week. Firstly, I saw there the potential for a very large May 2023 to date cat's ears pattern. Now this is a bearish pattern akin to a double top, formed after a big fall, such as the fall we had earlier in 2023, as well as an even longer term second pattern, an August 2020 to date, very large head and shoulders top pattern. These 2 super long term patterns are still live, and they both rely on one feature that is below the market, and that is their common neckline, highlighted in dark blue on my daily chart, and it's currently at 167.40. The third feature is a little closer to the market, but a little more longer term. It is the March 2016 to date uptrend, highlighted in purple on my daily chart, currently at 176.60. This week I've been trading below it all week. We've done this before. Just look back to June last year and see. So unless prices make a sharp about turn higher, then this purple uptrend will be first demoted and then likely retired. Now there is one major possibly severe criticism of all 3 of these patterns, and that is they have all been previously breached, and some would argue broken. However, I have transposed these from my longer term monthly charts, and whilst on daily and even on weekly charts they may appear breached and broken, on the longer term monthly charts where they really live, they are still somewhat valid, and so I would not take these as cast iron lines in the sand that should not be crossed, but as longer term strategic patterns that we should bear in mind and occasionally bring a closer eye upon, as we have done today.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.